Welcome to the Trading Lounge and the Indices report, and starting with the Hong Kong market here, the Hang Seng. And the reason for this is because it's just got such a nice pattern here and it should make a worthy trade. So as you can see here, we've got, I'm labeling it wave 1 and wave 2. And we've got this nice strong third wave with a very strong third wave in the center of that third wave, as it should be, and then wave 5 for wave 3. We've got a very nice A, B and C correction here. So this should leave us with a move going, just change that a bit. So it should leave us with a move coming up near the, anywhere between 29 and 30,000, and we can look for count 5 waves as the market moves up through here. So it will be a trade that would, wave 5 here could look a little bit like wave 1 here. So there's going to be sharp retracements here. So it's the sort of trade where I know that you normally wouldn't trade this particular market, and that's fine. But if you were going to trade it, then gleaning a small position, 1 or 2 small positions in this section here, and leaving the stop well out of the way here, and then looking to build the trade on top of 28,000 here. 28, the 8's a minor trading level. So here we've got 23, so 21, 22 and 23 will be minor levels. This 25 is a medium level. 28 is a minor trading level. This is 26.50 here. So this is what I call the 65 number here. And obviously the major trading level here. So I think it's worth a little bit of thought, and don't, of course, overtrade, because it's something that you need to leave in there for a while. And so there we go. It should spend obviously a bit of time around this area up through here, and you may want to sort of get out at that point there. But I think that it's important to undertrade, so you don't even sort of bother about it in a way, and then just look to build a few positions above that. So anyway, I just thought I'd throw that in, and we'll monitor this this move up through here. And okay, so the next market is the Australian market. So as I mentioned yesterday, most of the other markets, like the one we just looked at, the Hong Kong market and the Chinese market, and many of the European markets, we're kind of expecting them to make new highs above here. So it's also possible for the ASX200 to do the same as well. But as you know, I've just sort of been working from the banking side, and the banking side has got 5 waves down through to here. Well, they count better as 5 waves rather than 3 waves. So as I mentioned before, our target here is the 61.8% mark, the 5800 here, and we are looking for a move up through to here. We're looking for an ABC correction moving up through here. But I must say the current move that is moving up through here is looking more impulsive rather than corrective. So if it is impulsive, then we'll take these highs out here. It's just that we also overlapped wave 1 here. So as I mentioned before, let's just get to 5.8 here. Let's look at the reaction. Let's see if we can get some support on the 5.8, and if so, well, then we'll move to the upside from that point there. So just steps and one at a time, so to speak. So so with that in mind, let's just look at the 2-hour chart here. So I've rejigged the wave count here, and I've just sort of come out 1 degree. Now I'm looking at this as wave A, an A and a B and a C for wave B, which we had before, but before, instead of blue here, we had green here. So I feel a bit more comfortable placing this here, feel better about that. Now with trend channels like we've got here, now in an impulse wave, it's normally the third wave that breaks out of it here. So obviously I've got it down as wave C in orange here, which is minor degree, but it certainly can be wave 3 as well. As I mentioned, at 5.8, we'll handle that when we get there. I keep the alternative count on this charting program in this square here, okay? So any alternative counts will have a little square around them, just makes it a little bit easier. Okay, so with that in mind, from wave B here, we're looking for wave 1 and 2, and currently we're in wave 3 here, and we're looking for 5 waves in here. Yeah, so I think it's best if we go to the 15-minute chart and look at this, because I've got the green one just over here. So the main point to take away from here is we're heading for 5-8, and we're looking for 5 waves from this minor level, 500, because the Fibonacci numbers go 1, 2, 3, 5, and 8. And of course, all of these are important as well, but they're important in terms of a lesser degree, that's all. So 5 would carry more weight and 8 would carry more weight in most cases. So they're just little flags to swim between, that's all. So, and 15 minutes. So just squash this up a little bit and get our bearings here. So from wave 2, you know that we're in the third wave coming up here. So from wave 2, I'm looking at this as wave 1 to here, wave 2 to here, and then 1, 2, 3, 4, and 5 here for wave 3, yeah, and then wave 4, which will pull back to the wave 4 of 1 lesser degree, and then wave 5 up through to this area here somewhere. I haven't really nailed that down in terms of working out all the ratios and so forth just yet, but just sort of eyeballing it up, so to speak. And once we get to wave 3, so basically what we're doing, we're changing in the actual trend. We're actually changing. So in this trend from wave 2 to wave 3 here, for instance, that would be right in the center there, and that would suit that makes sense. That was the strongest part of the wave structure, right in the middle there. So that's the center part here. So normally we can kind of take the beginning here and flip it over on its head here, and get this structure over here. But yeah, so we start to get series of waves, 4s and 5s in this section here. So it's more of a creeping kind of price pattern rather than what you see here. What you see is never what you get next. You always get the opposite of what you're always seeing. So if you see a trend, well, then you're going to get a correction. So you see a trend here, you're going to get a correction. After a correction, you look at that and you go, well, that's not what I want, but the next thing is the trend. So the correction is so important because, well, firstly, it's the thing that stops you out. So it's the thing that takes your money. But at the same time, the beauty of it is that it's where the next trend is engineered from. So I know that sounds really simple, but most traders sort of either focus on bullish markets or bearish markets, but really the answer lies in the correction, because the trend and the money will take care of itself if you can get the correction right. Couple of points here. We're in group 2 here, subgroup 2, and we've got support on 72 here, so we should push up from here and into 57 here. Now with 5700 here, we're looking at a classic trading levels pattern. You can see it in Elliott terms, but in the classic trading levels pattern, we have the arrival, the reaction, the first high above the level, then an ABC correction, and then we go up again. Okay, so that's what we're looking for there. Okay, the US markets, was looking at the S&P 500 here. There's no change, and I haven't changed the drawing either. So it's still roughly the same. So what we're looking for here is 1 and 2 here, the third wave, the fourth wave, and the fifth wave here, and then we're looking for an A and a B and a C here, pulling back to the 50-60% retracement level. It may not come down here, but I think things like this gap here and so forth is quite important. And I've labelled this over here as an A and a B and a C here to end that particular structure. But when I look at the NASDAQ, the NASDAQ, this low here is actually higher than this low here. So we need to be careful that this is not actually an A wave to here, a B wave to here, and a C wave here that finishes here. Now, that would sort of make sense to me, but at the same time, when we look at the DAX, for instance, and the European markets and of course the Asian markets, there's still a lot more upside to come. So I think it's probably the right count in for the time being anyway, is to look at these 5 waves here, consider a larger pullback into the 50-60% area, and then up from that point. Now, in the normal process of the trading levels, what we would normally see is working with group 1 here. So 2100, well, 2000 is a major trading level, and then 100, which is just 1 with a couple of zeros, then 200 and 300, they're all minor levels, and then these are sub levels in here. So what we've got here is got 1, 2, and 3 here. So this is the top of group 1 here. And if we can get support on top of group 1, well, then it separates the order flow from this 100, this larger number. It will separate, the glue will break, and then the magnets of the 2150 and 2200 will start to come into play. So normally what I sort of see with the top of group 1 is that the market can come back down to 250, 21, the 5 between these two here is quite common, and then the push up here. So sort of like the arrival, the reaction, the first high above the level, then a corrective move, and then up through here. So it's quite a process to go. So if we moved up, let's just draw a line from, say, the 15 there, and we move up here, then it's quite common for it to move to this point here. It can move to this point here. I'll just put it here I'll put it here because that's thing. And then it starts to basically work from that point here. It takes a bit of a time. You know, if support is going to be found on number 3, wherever there's a number 3, always consider it takes time to develop support here, and because it is really, it's such a important number, because support here, it just separates the market from whatever it was doing before. That's the point of no return, getting that tested support there. So it is. Once you get the hang of this, it's really important, because that's when you add to your positions. I always feel trading to this number is important, getting out, and then waiting over here to see if it does get support, and then moving back in it from that point, and not getting involved in all of this, which whatever happens, there's 2 or 3 things that can happen from that level. So so it's just number 3. It's just another important. Every single number is obviously important, and they've all got their own little personalities, and getting to know them all is really important. Each from number 1 to number 9, and that I use 72 a lot, and 72 is well, it's got its own little sort of idiosyncrasies, and it's based off the number 9. So you have number 9, and if you double 9, you got 18, and then the 1 and the 8 equals 9. If you double 18, you got 27, so 2 and 7 equal 9. If you add 18 and 27 together, you get 45, so 4 and 5 equals 9. 27 and 45 added up equals 72, so 7 and 2 equal 9. 45, 72 equals 117, so 7 and 1 is 9, and then 72 and 117 is 189, so you've got 189, so that equals 18, and 18, so 1 and 8 equals 9, and so on. So you can keep building it like that. That's just one of the magical, the 9ness about it all, really. So there's a lot of other aspects about that number as well. So they all carry their certain things, and they all play out in certain ways, and that's enough rabbiting on as I do. And the DAX. So looking at the DAX, as I mentioned, I'm just going to leave, these are 2 patterns that we looked at yesterday. So these are possibilities. It's not like they're set in concrete, but they're 2 things that we may face. So the move down, this is a flat correction here. So an A wave here, a B wave here, and a C wave here. and this move down here in 3 waves is this one here, and basically 5 waves down for the A wave, the B wave, and the C wave down through to here. And currently we're just at that little arrow, so I'll just move the arrow around to see where we are, and then eventually we can, you know, either include these or eliminate them and so forth. So down the bottom here for the DAX, you know, I'm just going to leave wave 4 here and wave 4 here too, because in this particular case, this low here is above this one just. But on the stock 50 and the FTSE and other markets, it's actually lower here. So I think that in terms of counting up here, we need to take 2 counts in perspective. And the primary one that we should really focus on is not so much this one, but having wave 4 on this last low here, and that would be a conservative way. So in that way we can look at this as wave 1, wave 2 and wave 3, or we can look at it as an A wave and a B wave and a C wave moving into the 50-60% area. Now in this particular case here, we know that the 11,500 here is extremely important, and we'd want it as support. So I would expect it to vibrate back and forth across this level before developing support and then moving up. And in lining that vibration up as a corrective pattern would be wave 4 here. So if we can move in here, I'm not sure what I've got this on here. Let's just have a look. I'll put it on the 2-hour chart here. I haven't labeled that, so we'll go into the 1-hour chart. I haven't labelled that either, so we'll go into the 15-minute chart. That's what we've been obviously working on. Okay, so just squash this up a little bit. So I think working off this wave low, the last low is wave 4, I think that's very practical and conservative and not getting ahead of ourselves in any way. So we're looking at wave 1 and wave 2 and wave 3 up here. Now wave 3 may not be a finish because and it may end up turning into a larger extension as well, and that wouldn't surprise me. But from this wave 4 here, I've got this labeled as wave 1 and 2 here. But maybe all of this is wave 3 and little wave 4 here and then wave 5 over here. So it's possible that this little wave 5 can come just over here and then have this ABC correction here. Okay, so but I'll just leave that there for the time being, because in one way or another, even if we do make another high here, I would still expect the market to come back and have some type of correction here. So in the current worst case scenario for this market, in terms of leaving a stop out of the way, which should be left under the 11.3 here, and well, this is number 3, and this is the top of also group 1 as well, and you can see that it's really tested here. Once that test happens, then you know that it's leaving the 11,000. That's the importance of the top of group 1, 2 and 3. Anyway, so I've got this as the 38.2 retracement level here, so that's probably the downside of this here. Otherwise, you can expect on the more of a positive side, one more move to the upside here in 5 waves, and then the A, the B and the C correction, something like this here, before moving up. So it'll be something like that. So if you're going for the longer haul, which is not such a bad idea, then leaving the stop well out of the way. Of course, most people overtrade and they can't leave the stops that far away. So yeah, you know, we've all got our own little ways of doing things, and that's fine. I'm less is more for me. I want to be able to sleep. Okay, well, that covers those indices. Okay, cheers.